We are excited for this segment because, as you said at the top, Ren, I've released revealed my portfolio.
Yes.
You have revealed yours.
Yes.
And now we're on a journey to try and get as many experts as we can to reveal theirs.
Yes, it is going to be tough. I think people are sometimes nervous to share what they actually are investing in. I was certainly nervous to share what I was investing in. So that's why we're very appreciative for this guest for taking the time and being brave enough to share what is in his portfolio. Owen Rask, welcome to Equity Mates.
Thanks, guys. It's always a pleasure to join you and happy to share. I love it.
So Owen is founder of Rask and chief investment officer of Rask Invest. So, he does a lot of, if you haven't come across Owen before, does a huge amount of work in the financial education space and has just launched his own investment platform. So make sure you go and check that out. We'll put a link in the show notes. But Owen, I think we'll just start at the top with one simple question. What is in your investment portfolio?
Sure. Well, mostly ETFs nowadays. As you guys, wrote about in the books and stuff, ETFs are the kind of the core bedrock of most investors, I would say, that are starting out or newer. So I have all the usual suspects in there, things like VAS, the Vanguard Australian Shares ETF. We've got IVV, which is the iShares S&P 500 unhedged ETF. We've also got a little bit of the hedged one. So that's the currency hedging one. About 1/3 of our global shares are hedged. So that's the IHVV ETF. I don't know how nerdy you want to get, but another one
Give it
that
to us.
I have.
Yeah.
Sure. So another one which is a bit more spicy is emerging markets. So this is markets like China, India, that sort of thing. The most recent position that I've added to my own portfolio, which is the portfolio that I also manage, is the eMarket ETF from VanEck. So this is a multi-factor ETF. So EMKT is the ticker symbol for anyone that's playing along. And this ETF invests in emerging markets. But one of the problems that you have with emerging markets is if you go with an index strategy, the first thing is, one, the fees are really high. So they're like as high as some active funds in Australia, for example. And number two is they don't always do a great job of tracking what you want because of various issues with currency, with the way markets are constructed in emerging markets. It's typically like on par whether you want an active or a passive strategy. Whereas like most of us here in Australia know that active underperforms passive. It's quite different in emerging markets. And so this fund, what it does is not active and it's not passive. It's somewhere in between. It's multi-factor. And so the reason why we bought it is because it kind of screens for quality companies in emerging markets and holds them for the long term. So there's not much turnover. In terms of our cash positions, I hold the AAA cash ETF from BetaShares. Just as a little bit of a weird one, there's a lot of cash ETFs you could buy, but this one in particular uses a high interest savings accounts and term deposit type things, which is different. Most of the cash ETFs you see around the world invest in money market securities, kind of like Warren Buffett with Berkshire. He owns like money market securities. If you see cash on his Berkshire balance sheet, that's money market securities. And they typically don't yield as much as a bank account because there is a little bit of extra risk that comes with a bank account versus a treasury or something like that. So we own that. And the two bond ETFs that we have are IAF, the Aussie one, and then VBND, the Vanguard Global one. So that's the core portfolio. They can chop and change, but that's kind of the bedrock. Then obviously I have satellites. So
Owen, before we get to the satellites, I think one question that people might have about the core is IVV and IHVV both are in the core. Can you talk to us about why you have some hedged, some unhedged, rather than one or the other?
That's a really good question, mate, because particularly at the moment as we record this, the Australian dollar is nearing 70 cents. And there are instances like most people that are particularly maybe younger investors or people that are newer to investing might be familiar with like the Australian dollar being like 60 to 70 cents. But there are a lot of times where that's not the case. Like in 2010, 2011, the Australian dollar was worth more than the US dollar. And it's only been really since then, like the last 10 years, that we've seen the Australian dollar slowly falling while at the same time the US stock market going up. So that's like a double hit in terms of double goodness. If you're investing in the US, you get in the US market going up, and hey, those US dollars that you're investing in the US market are also worth more. So you're getting like a double hit. But we could be at a time now where even if the US market keeps going up, the Australian dollar might not keep going down. And so for us, that's not an all or nothing. Like some people seem to have this approach. It's like, well, am I hedged or unhedged? Well, why not just do a little bit of both? And a lot of the data suggests that even just a little bit of hedging in there is okay. So that's what we've got in what we call our Jupiter strategy, which is the strategy that I personally invest in. So, we have a lot in unhedged, slightly lower fees, and then a little bit of hedged version in there as well. And it's just a good blend. As you get towards retirement, you probably want more currency hedging than less because it just helps neutralize that impact for you a bit.
And Owen, apologies if I completely missed it there, but no exposure to Europe, like direct ETF exposure? No. Not interested?
No, I like to holiday there. I just don't like to invest there. So it's a quite different. Obviously, every jurisdiction that you invest in, there may be different tax consequences. But like a common question that I also get is like, well, why use IVV and not VGS, which is the big Vanguard all-world one? And there's like iWorld as well from iShares and a heap of others, BGBL, whatever. The reality is I think that like you don't need 1,500 securities in an ETF to capture a lot of the global growth. Like there are ETFs like IOO from iShares, which is even like, I think it's 100 in there. And that has a higher fee, so we wouldn't invest in that anyway. But that one in particular has 100 global companies, which I think is adequate diversification, to be honest. But I'm a kind of a believer in American exceptionalism in that if you look at the US companies, like I'm recording this on a Rode mic. I think you've got a Shure mic. Rode is, I'm pretty sure, Australian, but like most of the things around us, I'm coming to you through an iMac, Apple, Microsoft, all these names, Tesla, whatever. They're businesses that change the world. And that's backed by like the biggest defense budget in the world. It's backed by democracy. The greenback is the currency. So I kind of believe that is going to keep winning, and I'm willing to put my chips there. But another interesting thing is that like around about 30 to 35% of the sales of those big American companies come from international markets. So even though I don't own, Unilever shares or something like that, or I don't invest directly into the UK, I know that people in the UK use iPhones. And, even people in Positano in Italy would use an iPhone, right? So like, I don't need to invest there and expose my portfolio to an additional layer of regulation and uncertainty to get that exposure. And another thing is we still have I'm still in the back of my mind, I'm like mindful that like China and India are like the two emerging superpowers. And so that's where the eMarket ETF that I mentioned before, that still gives us that exposure. And if I'm wrong in a few years, we can always switch on an ETF like IEU or the INDA type ETFs, the India ETFs. Like we can switch them on in the future if we want to through a satellite position or a new core position.
Nice.
So that's the core of your portfolio, Owen. Let's get to your satellite positions. Talk to us about what sits in that part of your portfolio.
Thanks, Ren. I think that like it's probably worth some context is probably important here. Like the RAS Group, which is the company that I run, is by far the biggest investment I've got. That is by far the biggest investment. I don't own all of it. I own about 60% of it. And so that is by far the most valuable thing in our financial lives. So I don't think that that's necessarily a core or a satellite. It's probably core to my being, but other than that, it's kind of like risky, like a satellite, but it's kind of like where my salary comes from. So maybe it's part of the core, but that's a big thing. And I think that for anyone that runs a business or can buy shares in private businesses, you can do that too. For example, I invested the biggest single investment that has happened over probably the last 2 years was an investment in another private business. So rather than investing in something on the stock exchange, a private company, and that company is like a digital company, a digital marketing company, and that just seemed to be a good way to invest my money at the time. But if that was like on the stock exchange, it would be like a micro nano cap or something like this. So just for context. And the only individual share that I own right now is Pro Medicus. PME is the ticker symbol. And the reason that that's the only individual share is because in order to align myself with our investors, I cleared the decks.
Yeah,
And I
right.
kind of sold a bunch of shares to put it into the ETF portfolios that I would manage. And I invested a lot of personal money, to be honest, in helping to support and build the Rask Group and launching the investment platform. But that's going to change over the next year. I'm going to keep investing in individual companies. Like, I keep kicking myself every time I look at like WiseTech, and I was like selling at $20. I don't know what it is now. I was looking at XRF Scientific this morning, which is a small industrials business. Like that's like 4x'd in the last 2 years. And the big one for me, one of my longest holdings was Xero, which I sold like a year ago. And that's, been really disappointing to watch that keep running.
Yeah.
So like I would love to get back into it and do more of that. But obviously it's just capital dependent, and hopefully over the next year I start to re-add to those positions.
Yeah, right.
So the question becomes, you mentioned some high quality businesses there that you sold. How come Pro Medicus didn't get the chop as well?
So the big thing with Pro Medicus was it was the very first company I ever recommended to our Rask Invest membership community. I think it was 2017 now.
Oh, wow.
And the second was Apple. And then Altium, I think, was third. And I bought it after our members, which is what I always have to do. And I think I bought about $7.40 or so. And I'd previously seen Sam Huppert, who's the CEO and co-founder of the business, a few years before, and I didn't buy it when it was like way less than that. And I always follow the principles of David Gardner, who's a co-founder of the Motley Fool and the Rule Breaker investing guy. And I was like, how does he like buy like Amazon at $2.30 and, keep holding it? And I thought just on principle alone, I have to keep holding this company for as long as I possibly can. And so even though it would have been easier to sell it, at times I have sold small portions of it, there's no way I'm going to sell what I've got left, because I'm like, it's just one of those things that I wanted to kind of put those runs on the board and just keep holding and holding and holding and holding. So I've maintained that position. And I've been very fortunate that the valuation has just got more and more stretched through time. Its company's obviously exceptional, but I just wanted to keep it for that. Maybe it's a vanity thing, but it's honestly like I just wanted to keep it just to say that I've been able to get like a 50 bagger or something like that. And that's the sole reason.
Wow.
Nice.
So, notable emissions Bitcoin.
well, mate, I do have some NFTs, and if anyone and a little bit of Bitcoin. If someone wants to tell me how I could possibly figure out what my secret phrase was,
Oh no!
Oh,
no.
by all means, tell me, because I can't find it, and so I've lost that forever. So there's an NFT of my face that I minted years ago, getting around in the ether somewhere, like the literal ether. It's out there. I can't control it. I've got it in my wallet that I can no longer access.
Oh, no.
Goodness.
Well, Owen, look, we really appreciate you taking the time and sharing your portfolio with us. It is much appreciated. I think people love hearing what is under the hood, but I think it also gives people listening confidence that you're not employing any crazy exotic strategies. You're buying ETFs like the rest of us.
Yeah.
So hopefully that leaves people with a bit of confidence. But thank you so much for joining us today.
Absolute pleasure, guys. Always. So thanks for having me.
Thanks, Owen.
I will say this about investing. Everything you do learn is cumulative. What I learned at 20 is useful.